Hey guys, thanks for tuning in. So I know it's been a while. I haven't posted any videos on YouTube for quite some time now, but I figured if I'm gonna make a video, I want to make sure that I'm delivering value to you guys. Today I'm gonna do a video on a real estate service company called CBRE. This is a company I've been doing research the past couple weeks, and I find it to be a really interesting opportunity. And so I'll explain some of those reasons why. So before we go any further, I just want to let you guys know this video is strictly for educational purposes. I'm not a financial advisor. I don't give financial advice. I simply share what I think, are good companies, and I happen to invest on my own, and I'm happy to share this information with you guys. So let's get straight to it. So CBRE, they're a commercial real estate company, and just so you learn a little bit about them, there's a summary section on what they offer here. So they offer real estate services, investment company worldwide. They have a lot of advisory services, global workplace solutions, real estate investment segments. The advisory services segment provides strategic advice and execution to owners, investors, and occupiers in real estate in connection with leasing, property sales, and mortgage services under the CBRE Capital Markets brand. Property and project management services include construction management, marketing, building engineering, accounting, and financial services for owners and investors in office, industrial, and retail properties. And valuation services that include market value appraisals, litigation support, discounted cash flow analysis, and feasibility studies, as well as consulting services such as a property condition report, hotel advisory, and environmental consulting. The Global Workplace Solutions segment offers facilities management, project management, and transaction management services. The Real Estate Investments segment provides investment management services under the CBRE Global Investors brand to pension funds, insurance companies, sovereign wealth funds, foundations, endowments, and other institutional investors. Development services under the Trammell Crow company brand, primarily to the users of and investors in commercial real estate, and flexible space solutions under the CBRE Hana brand, which includes office suites, conference rooms, and event space, and communal co-working space for institutional property owners. It also develops residential-led and mixed-use sites in London under the Telford home brands. I think this company is very well positioned given the service they provide to various real estate companies and real estate owners. So even if the real estate market goes through a downturn, yes, CBRE sales might decline, but they don't have the same exposure as some of these other real estate companies that are actually investing in the properties. CBRE is kind of the middleman. They have brokers, they provide all kinds of services. And so I think it's a very reliable business model, and we'll go through their statistics to just get a sense of how they're doing performance-wise, and we can evaluate based on these metrics here. So from a valuation standpoint, their P ratio, average P ratio in the last 5 years is to 18.9 compared to the industry real estate management development. Some of the P ratios averaged out to be about 33. So from a valuation standpoint, the P ratio, can indicate that this company is currently undervalued. So let's look at some other metrics that we can decide on. So price to sales trailing 12 month. This is a really interesting metric because it shows you how much the stock is trading at relative to the amount of sales. So this company has a 1.28 price to sell ratio compared to the industry average of 336 times sales. So the lower the P ratio and the P ratio, the price to sales ratio closest to 1 really shows that the company is meeting its growth expectations. So this is just another metric that you can make an assumption based on whether this company is overvalued or if it's undervalued, and it has a pretty good P ratio and a very good price to sales ratio. So let's go further in terms of growth. So from a growth perspective, the revenue growth in the last 5 years has been 17% compared to the industry average of 19%. And so there really, at this moment, there's not an estimated forward earnings per share long-term growth rate. But from this year to next year, there's 7.6%. Now there is based on these metrics here, the projected earnings per growth rate it seems like a lot of the real estate companies are going to bounce back. So, from a service company, this may not be the best growth rates, but for a real estate investment company, it looks like the real estate, a lot of the real estate companies are expected to bounce back in 2022 to 2023. It'll be interesting to see, some of these other companies. For example, I was listening to an earnings call for Equity Residential, and they were talking about how the recovery is really going to be the next 24 months, and that's mainly due to the eviction moratorium that's been placed for a lot of these residential, multifamily, and retail commercial spaces where landlords are not able to evict tenants until this eviction is lifted, the eviction moratorium. So it'll be interesting to see how that plays out. Okay, so next we have profit margins. Obviously, the real estate industry average has taken a beating the last 12 months with negative profit margins. CBRE has managed to maintain its profitability in the last 12 months. So it just really shows you, how solid this business model is during a downturn. The companies, did fairly well considering that the entire industry did negative returns. And so, that just goes to show you the strong business model that CBRE is in. From a return standpoint, return on investment 11%, return on assets 7%, negative return on assets for the industry average, and then return on equity 19% compared to the industry of 100%. So just a solid business overall. I mean, it's probably not going to get you really insane returns, but I think this is a company that will deliver reliable returns over time. From a balance sheet perspective, this company is relatively low leveraged with 23% debt to assets, and it seems that they have plenty of cash in the bank to be able to meet short-term obligations. So just a healthy balance sheet. It's not highly leveraged. They have good revenue growth, good profit margins, and yeah, I think this is great. I think this is a really solid business. So before I invest in any of these companies, I always like to get some confirmation from some of these research firms. And one company I really like is Zacks Research, and so I'm able to read these reports and just kind of get assurance on my decision. So the long-term 6 to 12 months, they've rated the stock as outperform. Short-term 1 to 3 months, they recommend it's a strong buy. You can read some summary to get some information more on the company and what they do. They provide you a sales estimate, so you can see in the fourth quarter of 2021, they're expected to close about $8 billion in sales. Fourth quarter of 2022, they're expected to do $9 billion in sales. So overall, strong growth outlook in sales, which is one of the things I really look for. I like to invest in companies that have consistent sales growth over time. All right, here's another metric we didn't look at on the Fidelity website, but it has a PEG ratio of 1.7, which is also a really good indicator that this company is meeting its growth expectations. So just a very strong financial performance. So again, more overview on the company itself, but the main thing I'm looking for here is you can read through these, key reasons on why you could buy the stock if you wanted to buy it. So it'll show you some of these reasons that are favorable to this company. Just to get a quick idea, CBRE's growth, wide real estate products and service offerings, healthy outsourcing, business strategic buys, technology investments, and solid balance sheet, and expected to drive performance. I've actually been to a CBRE office, and I can tell you that they have some of the most high technology systems in their office, where you can basically get any kind of data regarding the real estate market, and also what are the key drivers. So like, for example, in the industrial space, they're really looking at the distribution flow from the Longport Beach in California, and a lot of those shipping containers go to Ontario, California as a central hub, and then from the central hub you have the 18-wheelers that come by, they pick up the merchandise, and they distribute basically all across the world, all across the country. They go up, they go north, they go east towards Chicago, they go to Texas. So CBRE has some really good technology in place. And then of course you always want to consider what are the potential pitfalls or what are the risks. And based on this research report, it looks like there's a lot of competition in this space. I mean, you got JLL that does practically the same thing that CBRE does. So there is obviously going to be some competition. And personally, I work in the real estate industry, and I've actually worked with CBRE. I mean, these guys deliver a great service, and I don't see why they wouldn't be able to outperform the competition. I mean, they have the resources and they have the talent to be able to be successful. So just another couple of things to think about before you invest is always want to look at and analyze and see if you're acceptable with the potential risk. And then last but definitely not least, I always like to get some expert recommendation. And it looks like their valuation says here, over the past 5 years, this stock has traded as high as 23x and as low as 7x, with a 5-year median of 14.69x. Our outperform recommendation indicates the stock will perform better than the market. Our current price, our 115 price target reflects 20 times earnings. So they're projecting the stock will hit $115. If we go back to the page, it's currently trading at $99 per share as of November 20th, 2021. So if I just do a quick check on that, if they're projecting $115 per share, and we divide it by the current price of $99 a share, that's about a 16% growth rate from here and 12 months out. So that's basically how I decide on if this company will be good. And based on the research from Zacks, this company looks somewhat promising. I also work in the real estate industry, and I see that multifamily and retail commercial real estate is slowly starting to recover as tenants are paying rent. People are moving back to the big city. Also, the current eviction moratorium is set to be, as far as Los Angeles goes, the eviction moratorium for the city of Los Angeles is expected to be lifted in October 2022, which is still 12 months out, and a lot can happen, especially if tenants aren't paying rent. But the key thing to consider here and keep in mind is that all these tenants that are not paying rent due to COVID, they have to provide proof to the city that they were affected by COVID. So if they're not affected by COVID and they can't prove it and they're not paying rent, they will still have to pay all the rent back within 12 months, which could lead to a lot of different interesting outcomes in the next 12 months. There could be some big delinquencies, and there will be some landlords that are over leveraged and are taking some losses. So you might be able to see some good potential buying opportunities in the real estate industry in the next 12 months, or vice versa. It can go the other way. It's just really paying attention to the key indicators, population, market vacancies, new supply that's coming online, and so I think CBRE is an interesting stock in the real estate industry, and this may be a good opportunity to look into other real estate companies that actually invest in the real estate that are currently distressed but are estimated to improve in the next 12 months. So I hope this video was helpful. If you have any questions, please feel free to comment down below, and I look forward to speaking to you in the next video. Thank you.